Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, there were two very volatile events that the markets had to deal with. One being the ECB press conference with Mario Draghi talking about how the ECB was potentially going to be moving forward in terms of its monetary policy. And also then on Friday we had the key non-farm payrolls report. Now, starting with the payrolls report, that was a very strong report. We had payrolls coming in well above expectations across the board, and also we saw the average weekly earnings growth rising to 0.4%. Now, that average weekly earnings growth, I believe, is the key component of that report, because it is a level or a data point that the Fed is looking at in terms of how it's going to be moving forward with its tightening program. And certainly if it sees wages growing, then that is certainly going to be giving it a bit of a nudge in the direction of tightening. Now, this dollar strength that we've seen in recent weeks continues to drive higher. This dollar index is now up towards the highest level it's seen since March 2009, and that was the point in March 2009 at which they had the first extension to QE1, whereby they had a huge impact of stimulus on the market in terms of extra quantitative easing, and that started pulling the dollar lower. So we have now almost retraced entirely that whole quantitative easing drive, which is very interesting. So March 2009 high, it was almost being tested on that dollar index. Now, this strong dollar has certainly impacted across the board on forex markets, on commodities as well. So this continues to be a big impact on these indices, on these instruments. Okay, so what else have we got? Well, we had this ECB meeting last week. Now, Mario Draghi gave some mixed signals. He didn't really give the market what it wanted. The market was a little bit disappointed. Stock market sold off. The euro pushed strongly higher. But then after hours, there was an indication from ECB staff that perhaps the ECB Governing Council was beginning to put together a package of potential easing or further quantitative easing in the January meeting. Now, that had the opposite effect in terms of the euro, had pulled the euro strongly lower, and then stocks started to rise again. But we've got a couple of big announcements this week which could have an impact on this. We've got the announcement of what's going to be the ECB purchases of asset-backed securities, and also we're looking out for the TLTRO second tranche of the targeted long-term refinancing operation that the ECB is driving through. Now, the first tranche of the TLTRO had the impact of around about 83 billion euros of take up. Now, the second tranche is expected to be more than double that. It's around about I think in the mid 170s in terms of euros. But all the expectations are ranging between 100 and 200 billion euros. So it will be significantly more than the first take-up. But how this take-up comes through, if it's a big, strong demand for it, it might even have an impact on the euro, strengthening the euro, because it sort of then reduces potentially the expectations of the market in terms of quantitative easing and the need for quantitative easing. So that's a key element that we could be seeing this week. So across the board on forex markets, the impact certainly has been, as I said, with this dollar strength, that a lot of these major pairs have been impacted by this, and certainly the euro is one of the key majors that has gone through a key floor of support. 123.57 has been broken. Now, that completed a descending triangle pattern that gives us an implied target of $1.2070 in the coming weeks. And that is only 30 pips away from that crucial 2012 low that we saw on the euro when Mario Draghi said the immortal words, whatever it takes. And that was at $1.2040. So that is the implied target to the downside. Cable is a similar looking chart. It's broken through its support at $1.5585. That's opened the next key level of $1.5425. But it certainly looks like any sort of rebounds are being used as a chance to sell. The resistance band between $1.56 and $1.57 certainly looks like a reasonable selling zone there on cable again. The dollar yen chart, what a chart this is. This continues to push strongly higher, although in the early hours of Monday it started to come off a little bit, but all the corrections in recent weeks have been used as a chance to buy, and I think there's a decent band of support between 119 and 120, but certainly looks like there's no real resistance now until on the upside up towards 124.16, which was the June 2007 key high. Other forex currencies, the commodity currencies have come under, as I said, with this strong dollar story. The commodity currencies have come under big pressure, with the Australian dollar and the Kiwi dollar both going strongly lower, and also the Canadian loonie is also looking to break out. So a lot of impact through this strong dollar, and that is the big story in these currency markets. On the indices, we've had the markets pushing strongly higher. The S&P and the DAX have both been hitting new all-time highs, but there is slight air of maybe a bit of a correction, but still there's a lot of volatility, certainly in the last few days with the on Thursday, Friday last week, and there's been a bit of a correction that's come in this in early today through a bit of disappointing Asian data. But certainly at the moment there's a little bit of toing and froing. There's no real conviction either way, and the DAX and the S&P are just currently looking to consolidate a little bit of these gains. There's a decent band of support between 2040 and 2050 on the S&P 500 and around 9,800 on the DAX. Now FTSE 100 is a different issue. It's just pushing sideways, it's consolidating, it's not really being able to break out. Whilst the other indices have been moving higher, the FTSE 100 has been unable to break out from this trading range. Now, that gives me a few concerns, but still I'm not saying it's a sell. I'm just saying that it is still a worry in terms of underperformance. The FTSE continues on a consistent basis to underperform the DAX. And once again, on Monday morning, it seems to be that is what we're seeing again. Okay, so what about gold? Well, gold is in this dollar strength trade as well, whereby any strong strength on the dollar has an impact on the negative side to the gold price, and certainly that non-farm payrolls report on Friday pulled gold strongly lower. Again, now we're back towards we're back below the 1200 level, which is a bit of a near-term psychological support, I think. And it'll be interesting to see if we now come back to test that key long-term pivot level at 1,180. If that key long-term level gets broken to the downside, I can see a further retracement back towards the lows of around 1,132. But at the moment, it's just holding on. It's sort of still deciding what to do, and a little bit of consolidation. And there's still a battle going on as to who's going to control this one. But at the moment, trading slightly below 1200, I'm still sort of erring on the cautious side, and I think the bears are slightly in control on the gold price. Okay, so for the rest of the week, as I said, we've got there's not a lot of US data to concentrate on. There's sort of a couple of key bits of Chinese data, and this obviously the Eurozone news, but certainly on Tuesday we're looking out for the UK manufacturing PMI. Not a huge number, but certainly that could have an impact on sterling. Then on to Wednesday we've got the Chinese CPI, which comes out. If Chinese inflation disappoints to the downside, that could drive expectations of further monetary easing from the People's Bank of China. And then on to the next couple of days, we've got a couple of central banks for the majors. We've got the New Zealand, the Reserve Bank of New Zealand, and also the SNB, the Swiss National Bank, both with rate decisions. No change expected, but still they could have an impact on their currencies. And then obviously on to Thursday, we've got this TLTRO decision, TLTRO take-up demand by from the ECB, and see how the banks take up the TLTRO, and that could have a big impact on the euro. And then we finally finish off the week with the Michigan sentiment from the States, and that's your lot for this week. But I wish you good luck in your trading across everything this week, and I will speak to you again next week. Thank you very much.